My content is intended to be used and must be used for educational purposes only. It is very important to do your own analysis before making any investment based on your own personal circumstances. You should take independent financial advice from a professional in connection with or independently research any information you find from my videos that you wish to rely upon, whether for the purpose of making an investment decision or otherwise. Okay, we got April 1st. It is a Monday. It is Monday, April 1st, start of the new month, start of the new quarter, start of the new quarterly candles for trading. So a lot of things to be excited about. So did a lot of reflecting over the previous quarter in my trades, identified what I was good at, identified what I was bad at, and then did a little bit of work with exponential moving averages this week, and then created a new rule for my trading to help me avoid where I'm trading against trend. So today's video is going to be a little bit of trading stuff. We got some trades to cover. We're going to be going over a few trades that I ended up cutting today, and then a few trades that I ended up adding on today. So that's the agenda for today. I'll be talking a little bit about what I reflected on this week and what I found. We'll be doing that first. Then we'll be getting into the trades that I cut, and then we'll be getting into review of the current trades that I'm in, and then trades that I'm looking to enter here coming up. So that is the plan for today. If you could leave a like, subscribe, or comment, that'd be very appreciated. But just you being here is more than enough. So thank you so much for watching. All right, let's go look at what I was reflecting on this week. So I have struggled in the past correctly identifying when sectors are going to be ready. So for example, energy. I just could not get when this energy. I knew this energy move was coming. I knew it was coming. I just could not. I really struggled to find it. I was trying to play energy back in December and then into early January, and it just was not ready. So, for example, like EOG is an energy name. EOG, I absolutely loved EOG just because of this right here. Now, this is a little bit of, it's some of my first times trading these weekly candles and this daily time frame like this. Like, yes, of course, I use this on the daily time frame, and I have a lot more trading experience. Or no, not the daily, intraday time frame. So like 15 minutes specifically, 5 minutes as well. So I have a lot more experience on the intraday time frames. So as someone who was just inexperienced, I mean, I saw this huge buying reaction down at demand here on EOG. You could even say it was a break and retest from back here. I mean, here's your demand back here. Here's your demand back here. And then we finally broke above. We held it on this candle, came down and almost made a rising wedge or like a falling wedge type look. So that's what got me interested in EOG originally. But I mean, this thing ended up failing down for much farther than I anticipated, and this ended up being a significant loser for my trading. So that was an example of where I just trend wasn't there. So if we go back and look at the weekly, let's turn on one thing from here. We're going to turn on moving averages. So it's going to be your 9, your 20, your 50, your 9, your 21, and your 50 right there. So if we're looking at this, I mean, trend was, here's your bullish trend. Here's your EMAs kind of flattening out. There's your EMAs flattening out through there. And then EMAs were crossing to the downside here. So I was trading against trend here. So it makes sense. Like, sure, the VPA is there, and sure, I was able to recognize that this was a huge move brewing in energy. I just wasn't ready, like, timing wise. Like this, I mean, we were just like the 9s crossing below the 21 here and almost attempting to cross below the 50. So trend was just not on my side. And yes, I identified VPA correctly, but I mean, this resulted in just an absolute premium crush in my position, and it resulted in like a contract expiring pretty much zero because my date was in like early March. So, I mean, I sit through how long since like early December, all the way to like here. Of course, my contract's going to be absolutely destroyed after like 3 weeks, like 9 weeks of consolidation and even breaking down a little bit. So obviously it had to form this base right here, and it did. So just including these weekly moving averages has significantly helped my trading. So we're going to look at, this is one of the big winners. So I believe you can see it. You can see it. So see how the price is trading above the 9, 21, and 50 right here. This one turned out to be a really good, nice weekly continuation runner. This turned out to be one of my bigger trades. So we had like a 18% run up on this on AMGN's price right here. So I was looking for different trades of where the moving averages would be. I just want to look at, I basically just took all my trades for the quarter and then threw on the moving averages and see what I could find. So I found that almost all of my losers had something like this. All my losers, I was, same thing with APD. APD, just like EOG, I saw that VPA. That looks great. Back here, it almost looks like some kind of double bottom. Here's your bottom one, here's your bottom two, high volume buying coming in, high volume buying right here, almost engulfs the selling candle. Like, sure, that looks great to the upside, but look where our moving averages are. We're trading below the moving averages. We're trading below trend right now. So there's no reason to be longing that. So I realized I had exact numbers in my Excel sheet, but I'm not going to pull that up yet. But I think it was just below 50% of my losers could have been cut by just having this rule of not taking trades when price is below trend. Like, here's Baidu, another example. We're trading below trend. This ended up being a loser. CMCSA, no, not a good entry. I mean, yeah, so same thing with CVX. This could have been exited. Like, sure, you're going to have all that VPA and, buying and everything down there. It's just the moving averages just weren't ready. So I was longing something that should have been longed. I mean, CVX looks great now. I was right. I was right directionally eventually, but timing was just off. So I think the moving averages are going to help exponentially with my timing of my trades and some of these weekly positions that I can get. So an example, I'm not gonna do it where the price has to be trending above the moving averages. I'm looking for coiled. So here's my MRK trade that ended up being awesome. So here's how, you've had your little consolidation period and then they're starting to trend up. You're extremely high volume coming in, and sure, we're trading just below, but it's at least gone through this little period of consolidation, about 8 weeks of consolidation right there to bring those averages down so we can eventually break those to the upside. And MRK ended up being an awesome freaking trade. And it did still struggle through these moving averages. I mean, it took 2 weeks to get out, and then we obviously had this really nice bullish run. So pretty much every single one of my big winners had this exact thing. Like, here's Disney. Look how coiled these EMAs are. You got your 50 on top of the 9, on top of the 21. So I really like the reflection I was doing this week, and it kind of tweaked my trading a little bit this week. So that'll be reflected in the review. So let's go get into the review. Let's go talk about Moderna. We've been in Moderna for a few days now. We did end up cutting Moderna today. So my strategy kind of changed over the weekend as I was doing that reflecting. So this is the weekly time frame. So I was primarily using the daily. I was looking for continued upside expansion past 112, but after evaluating the weekly right here, I just don't think 112 is viable until we at least come back down to 99 or maybe probably 100, and then consolidate within this area for a little bit just to let this 50 keep moving on down. We need that 50 moving average to keep coming down before we eventually break that. So yes, we're trading above the 9. Yes, we're trading above the 21, but we've seen rejection 1 of the 50 right there. And then we saw a high volume rejection of the 50 right there, and then we saw another rejection of the 50 last week. So I just don't think this is ready for upside continuation before this retests demand, and then therefore I didn't care to be in Moderna yet. I just didn't care. I just sold it for where it was. This ended up closing below where I would want to. Nope, it ended up closing above. My stop would have been right here, but we are now trading below the 9, and then it did confirm the double top today. So here's your little double top. So I just think a period of consolidation is coming for Moderna. I still really like it long. I just didn't care to be in that consolidation yet, or still. So that was my reasoning for why I'm no longer in Moderna. This thing looks awesome. This thing looks like I'm going to absolutely crush it again. I just think it's not ready yet. And then I think it really told us that last week when it created that double top right there. So that's Moderna. I think I have my tile still. Maybe not. I might have deleted it. Okay. So that's Moderna. Let's go into Cisco. Cisco I ended up cutting as well. I just did not care to be in this position. So I realized that a lot of my trades, a lot of the ones that I was looking for breakout trades, A lot of the breakout trades failed when the EMAs on the weekly especially were overextended. So here's a little bit of an overextension of your EMAs. I mean, your 9 still trading back at 75. I know that's not a huge, I mean, it's a $5 difference, but on this stock, $5 is going to be a lot more. So our EMAs are pretty extended here. You know, I'd honestly think more consolidation is probably likely on Cisco, and even if this does break to the upside, I just don't see a ton of upside expansion when we're already super extended from those EMAs. So I'm just leaving this one straight up. I don't care anymore. I think this definitely looks bullish. I mean, the 3-month looks extremely bullish. You know, you had your rising volume on the 3-month. I just think a little bit of maybe consolidation. I mean, here we've been consolidating for 2 months. I just don't think it's ready just yet. I think more consolidation is more likely than the breakout at this point. So that's another reason why I chose to close Cisco today as well. I'm really looking for those big moves where my risk to reward is extremely skewed to the upside, and then this it doesn't give me that skew here. So I just think the overextension of the EMAs. I mean, we had this nice, really bullish weekly candle right here, but that extension, you know, it brings on more risk than I'm willing to take on. So that's going to cover Cisco. Let's go talk about MCHP. MCHP, I am still in. I like MCHP because the EMAs are a little bit more coiled than your Cisco and Moderna, and then we are trading above the EMAs. So we're going to be keeping MCHP, and I do really like this weekly buying volume we're seeing right here. But the thesis is still the same on the daily. I mean, we're still playing the same daily. I'm just focusing a little bit more on the weekly as well, just because I do want to see these extended moves to the upside. Like, sure, I could find, you know, a few $1 or $2 moves, but I think I'm going to focus on those areas where my risk to reward is just insane. You know, I think I'm going to be focusing on those where my winners are going to maybe five-fold or 10-fold my losers. So that is the plan. But on the daily, I mean, even our moving averages are pretty coiled on the daily. I mean, here's your 50, your 21, your 9. So we're not extended at all. This looks great on the daily as well. So, I mean, we're still in this, kind of stuff consolidation zone right here is evident on the volume profile. But I do like where this is on the weekly as well. I think this is, let's see how the structure is. Structure is still bullish. So, I guess I'd rather see this come back down to, I think 85 would be an awesome level long, because you'd have your volume shelf support right there. But I do think MCHP looks good, and I do want to wait for this to fail on the daily to, you know, even consider selling this on the weekly. So that is the plan for MCHP. We have a nice bullish structure right now. We're trading above the moving averages, and that looks great. So stop on MCHP is a higher low, so we still don't have a higher low. So stop's probably going to be closed below the 50 right there, and that where price closed on Tuesday, March 26th. So that's MCHP. Pfizer, we're not in. This is one that I'm looking to enter, so let's go talk about that since we're here. I'm looking for a retest of 2750. We did not get there today. Let's turn off our moving averages because we don't need those right now. Off. I'm looking for an inverted head and shoulders. I'm looking for your, here's your shoulder, here's your head, here's your shoulder on Pfizer. I think 2750 looks like an awesome freaking level, and it just so happens to be your POC, your point of control. Let's go look at it on the daily. Yep, right at the point of control. I just need to close just a little bit farther down. Just tap 2750 for me here, pal. But this thing looks awesome. This thing looks really good. Yeah, just come down to 2750 and we'll take you long, Pfizer. It does have a bearish structure on the 4-hour now, which is good. I think it's likely going to keep rejecting this until it touches 2750. So an entry is probably likely here on Pfizer coming up. Let's go talk about it on the weekly time frame, because that's what we're going to be doing now. Where is it at on the weekly? Let's turn our moving averages back on to make sure we're not trading against trend. We are trading against trend, so I might not be taking Pfizer for a weekly trade here. Maybe just some kind of short-term bullishness off of this 2750, and then I'll be sure to get whatever I can off of this. So the daily's coiled, so this is going to be a shorter-term play. This is going to be more of a head and shoulder, inverted head and shoulders look, and then I'm probably going to be targeting something Probably something around 2840. Yeah, that seems pretty good. 2860. I mean, even, hope and prayer for 2950, maybe even 30. So that's the plan on Pfizer. It's gonna have to be really juicy for me to take this now that I'm looking at this. The weekly's trading pretty downtrending. So it has a decent base right now, but I don't think any real upside continuation is likely until this rejects 32 once or twice and then bounces around for about a few months. So kind of a short-term trade I'm looking at here, but I think this looks awesome. A 2750 bounce, and then you'll see 2850 in my opinion. So that looks great. BMY. I'm looking to exit BMY. I decided on Friday that my 9 EMA is going to be the exit. Looks really stupid right now, but structure is still bullish, and I think this is likely going to continue at ideally, I think this is going to probably maybe gap up tomorrow. Price will trade an inside candle on this sell candle and then eventually reject it. That's how we're probably going to create our bearish structure. But we're leaning bullish still. I mean, the 4-hour is still bullish. What's interesting is this 4-hour candle had almost double the 4-hour candle that got us back down to 53. So that's interesting. But yeah, I guess the plan, I decided on Friday that I was going to let the 9 EMA do it here. So we'll reign true to that. But I definitely don't like BMY for an extended move. If we go look at the weekly, zoom out a little bit, where are we? We are still trading down. A rejection of this 50 EMA now that we're trading above the 21. I think the rejection of probably right here is very likely. A rejection of 56, if this does continue to the upside, is probably going to be my ultimate stop, or like ultimate profit target right there. So I think a move to 56 is actually still pretty likely. I mean, sure, today's candle was a large sell-off, but the volume on the daily was kind of lacking. I mean, the volume's going to look super minuscule just because of this Friday the 15th day, but volume was lacking today. We filled this gap. That was needed to happen. We need to fill 52, 54, and then maybe we'll see 56. If not, it'll be a close of the 9 as a stop. Blackstone, I'm not in love with this one anymore. Especially after reflecting a little bit this weekend and what my big winners looked like. This one looked pretty extended. It looks pretty extended to me. It looks like it's due for a healthy pullback. I mean, this is closing right at double top territory. Now, the daily, it just looks so bullish to me. I mean, this weekly, Friday the 15th was huge. The daily structure is certainly bullish. A loss of turn these off, just so annoying sometimes. I wish there was a button that could do multiple indicators to turn off. That'd be sick. A loss of a 4-hour close below 130 is going to be my exit here. Just a tight exit. I don't know. I don't love this position. I'm trying to take less trades heading into this quarter. I took about 72 last quarter. I'm trying to reduce that to 36. I'm trying to do 36 trades for the whole quarter. And this trade just would not fit into my criteria of having the EMAs coiled and looking for an explosive move. This looks like, sure, I mean, the higher time frame looks great. I mean, we had increased buying volume this monthly candle. We did not have an increased spread, so that might be a little concerning. But the 3-month, I mean, looks very bullish. So I don't know. I just don't love it, I'm really wanting for those big winner, those big, that big reward, little small risk, and I think Blackstone just carries a little more risk than I'm willing to hold. So, yeah, not in love with Blackstone. If this so chooses to close a 4-hour candle below 130, then I'll be out. That's the plan on Blackstone. FCX looks awesome. I do not care that it gapped up today. Whatever candle did today, I do not care. If anything, I think this is likely the best thing this can do is like flag back down to this gap fill and go, but I don't even know if we can do that. This thing looks like a rocket ship. FCX looks awesome. I mean, this weekly volume on Friday on that gap up was awesome. So yeah, nice job FCX. I don't care what you did today. That thing looks bullish as all piss. Nice job FCX. ARK, I wanted to take this for a long, so glad I didn't. I thought this was a bullish pennant. It turned out to be a bullish pennant breakdown. I don't know. Do bullish pennants break down? I think they do. So bullish pennant breakdown. More importantly, this comes back right to a level that I'm trying to be a buyer at. I want to be a buyer right down here in demand. That's exactly where I want to be a buyer. If we go look at on the daily, that's where that is. So here's your retest of 49, and then here's your breakdown. But yeah, this thing looks sweet. This thing is kind of matching our weekly EMA's coiled criteria. Here's your high volume buying that you got, and then we've been consolidating within this, this little wedge for, I don't know, what, 4 or 5 weeks now. So I think this is likely gonna expand to the upside, but we will see. I just don't think it's ready yet. So waiting for a confirmation on ARK, just nothing yet. I mean, the daily's fine. I mean, structure's still bearish. So whenever this flips bullish on the daily, then maybe I'll get interested. Let's go talk about APO. On APO, I did end up closing this one today. Same thing as Cisco, really. We're pretty extended. We've had this nice bullish move. We had a long upper wick on the week of March 18th. So just don't care. Risk to reward's not there. Sure, you can continue higher APO, but I'm looking for these, explosive, expansive moves, and I don't know what you have to provide here. PCG, we entered today. PCG, we did enter today. We entered on these retest of 1650. That is exactly the number I wanted, and that's exactly the number I got. Nice low volume today, which is great to see. I think this is likely going to flag here, just because this candle had a significant volume compared to this very bullish Wednesday candle. So whenever you see that, I like to call that candle the anchor. That's the anchor right there. It's usually your very bullish candle followed by a decently high volume, just small candle. So it just kind of puts on the brakes right there. But yeah, so PCG trading just below the EMAs, which is fine. I said in the intro that I wouldn't be too picky on if it's trading just below. I just don't want to see it downtrending. So we have seen it, it could certainly reject this week and then close below, and that'll be my stop. But I do like how structure is looking. You made your nice double bottom here, and then we're looking to make a higher low this week. So really like that 1650 retest on the 4 hour especially. I mean, look at, oh, that's some insane volume. What happened? 15 minutes? Sure. Yeah, so that's PCG. I really like how this looks. I think the EMAs are going to cross to the upside here once we get a weekly close above 17. I think this will look really good. And then when we do get if and when we do get that weekly close above 17, I'm hoping it's on high volume. So maybe front running this one a little bit, but I do like it on the daily, so that's why I did it. Front running it just a little bit, because we did close back below the 50 today, but these on the daily are starting to creep up long here again, and I did really like that 1650 level, so we'll see if that holds. That is PCG. Let's go talk about FSLR. No trade. I'm not gonna talk about that. IYR. Whoa, high volume today. It looks like this is gonna actually come back down. This is not ready yet. Interesting. So I actually did take IYR for a long, just based off this criteria, where we have our EMAs coiled. It's essentially the same thing as well. Your high volume break, high volume break resistance, your low volume pullback. Notice how the highest sell volume we had was on the candle that we literally touched demand. So when that happens, that's a VPA anomaly, just because your spread is not matching your volume right here. And then since this was back at demand, we can assume that was a buying volume likely. And then we have our nice 1, 2, 3. You got super high volume buying, and then your low volume pullback, and then our EMAs are coiled, and then we are trading right above this volume profile shelf right here. So that looks awesome. I'm going to go pause the video really quick and grab my cat. The cat does not like the door being closed when I'm recording. Okay, so what I was talking about with IYR is I really like the EMAs coiled and this volume shelf support. I was shocked at today's volume when I did turn that on. That was shocking. That was some very high volume today. So that makes me think this is gonna gap fill, and then we maybe even test 87 again before continuing to the upside. So that is very interesting, very interesting. But I am really liking this for a long. Okay, quit rubbing up on the mic. Yeah, okay, I'm gonna take you down 1 sec. Okay, it is recording. Okay, sweet. So that's IYR. I mean, shocking today. Honestly, shocking daily volume, but this thing looks awesome to the upside, so I'm not concerned. XBI, same thing. I think this one's 91. I really do think this one's 90. I front run this one a little bit, kind of like real estate. Front run this one because we had that nice double bottom that looks like it might be breaking now, but we'll see. Rejected the 21 today. Large bottom wick, high volume. That's interesting. I mean, if this closes below 92.50, then I think this is likely we're going for 90 or 90 right here. There's your gap fill down here, and then I don't know. 90 is just your volume profile support. It's where the EMAs are going to be coiled. I think I'm front running XBI just a little bit. We got till June, so I think this will probably consolidate a little bit before this actually continues higher. And I think this is going to even cut lower. I think this is going to cut down to, it even could cut down to 87.50. So we'll be watching that, but I do like this for a long. Just don't think it's maybe ready yet. Your EMA's got to coil up. You got to touch that volume profile support. So we'll see. TAN, I'm not going to, TAN I can talk about a little bit. I don't care to be in this position yet. I'm mainly looking for FSLR to be, have risk into solar. I just don't think FSLR is very executable right now. Where's my entry? I need a little pullback here. Phillips Morris, it needs time. Not going to talk about. AMT probably needs time. Now that we saw real estate failed, but AMT on the weekly looks awesome. AMT on the weekly looks awesome. We're going to see volume profile support. Volume profile support right there. Your EMAs are coiling. Now we are coiling down at the moment, but they are literally locked in right here. So anything can happen. So very interesting week. We have an unfilled gap to the upside, so that's good. I'm looking for this to hold demand here and then ultimately holding 190, so that's what I'm looking for on AMT. AEP I really like, so I kind of got dipsy doodled on this name. I didn't get a great entry. I was looking for the retest to 85, so I did get a nice entry on the 85 retest. This did end up breaking down, so I was surprised it ended up breaking down, but whatever. I guess we'll wait for the EMAs to coil back down here, maybe even retest 83.50 before going higher, but same thing. Your weekly EMAs are coiled right here. You got your massive volume profile right here, and then you got a little bit of resistance up here at 90. So we're looking for a blast through 90, maybe come back down, retest this 84 one more time before we're going higher. But AEP looks awesome. Here's your coiling EMAs, and then it's looking really good to the upside here. So nice job AEP. Kind of got dipsy doodled on the daily. I did not think it was going to break down from 85 or whatever it was trading at that zone. So we did break down and whatever. So that's that. AEP. Duke Energy, same thing. EMA's coiled, trending higher right here, and then we got our high volume right here, and then we had very small candle, nice long upper wick, but high volume, and then we did close above it last week, so we did create a new higher low. Like this one off of the retest of, I think this is 95. No, the retest is 96. You could probably say like 95.50. Retested 95.50 right here. I was able to grab it in demand. It did go a little bit farther than I thought, but I do really like how Duke Energy looks. This monthly looks really good. Monthly EMAs are coiled right here, so that looks awesome. You don't usually get that. And then the 3 month looks, I hit an inside candle 3 month, the base kind of near demand, so that looks really good too. So I really like Duke Energy, and then the last one we're going to talk about is ADI. ADI I really like as well because your EMAs are coiled. I think if we see volume profile support about like 190, and then we've been trading within this like little wedge here for I don't know how long. So it's been quite some time we've been trading within this weekly wedge. So maybe one more week of consolidation. If this does even touch 190 again, that'd be insane. But your EMAs are super coiled on the weekly, and then I think it's very likely that this retests 193, fills that gap, and then goes. So that is the plan. So that was a lot to talk about today. Thank you so much for watching. That's going to be it for today. So if you could leave a like, comment, or subscribe, that'd be very appreciated. And I thank you so much for watching. I will catch you tomorrow.